Hi, I'm Brian Boggs from the Leading Minds Academy, and I'm joined today in the studio by three industry leaders. Firstly, Mr. Bernie Ripoll, Member of Parliament for Oxley and Chairman of the Joint Parliamentary Committee into the Financial Services, Mr. Robbie Bennetts, Chairman of PIS, one of the largest dealer groups in Australia, and of course, Mr. Jim Minto, Managing Director of Tower Life Insurance, one of the country's largest product manufacturers. Now, gentlemen, can we discuss the debate that's been going on around the countryside over the last few months on commissions versus fees? Now, there's a price to that advice. Mr. Bernie Ripoll.
I don't think it's price alone. Look, in my view, it's price of advice and appropriateness of advice. They're linked, and I don't think they can be separated. I think that people should pay a fair price for advice, but the appropriateness of advice is key in making sure that whatever it is that you pay or how you pay, in the end delivers what you're buying. So I think the real question and the diversity within the financial services world is that not everybody is sure what they're paying for or what they're getting in return. For many, I don't think it's a question of the actual price or how they pay, it's just they're not sure what they're getting for it.
Now, Robbie Bennetts.
Well, it's a very, very complex field, Brian, and I don't think it's going to be resolved quite as easy as what a lot of people would like to see the situation come to a conclusion. So many people are saying get rid of commissions. It depends on how you want to determine commissions, fees, asset commissions. What are we going to do? We're going to go off to the banks and say, well, you can't have your 5% margin or your 3% margin. Are we going to go to a fund manager and say, well, you're charging 2% as an asset fee? Are we going to start going down that path, or are we going to operate in a very unequal field and say, well, the advisor can't charge an asset fee, but the fund manager can, which would then encourage everybody to become a fund manager and take your fees that way. We have a situation where fees, it was always let's go to fees and get rid of commissions, and of course Storm is a classic example. It was a fee-based business, and so I don't know if the real answer is just as simple as fees versus commission. Personally, I would like to see the level that everybody can take capped. There are many ways, but I think if we just cap the fees, however it be charged, whether you want to charge it as a flat fee, a commission or a percentage fee, if we were to come up with something that everybody was to agree on, which I would suggest could be done, then we get rid of all the conflicts and all the arguments in the industry.
Jim, in the UK, I understand there's a level-based commission model that's got acceptance. Do you see the similar thing happening here in Australia?
Well, that model is used in Australia and has been for many, many years. So today in life insurance, people have a choice of having no commission, or a level commission, or a hybrid commission, or an upfront commission. And it's a model that's generally working pretty well. On this whole issue, I think the biggest single stakeholder here is the consumer. If when we built FSR, we had put up front on the first 2 pages of the disclosure the essence of the conflicts and the remuneration, we wouldn't be having this discussion today, because public debate on this would have evolved a lot more, as it has in all other industries, similar industries. So consumer awareness creates, people should have choices. Why don't they have choices in these matters they don't know enough about? In life insurance, there's already a huge amount of choice. It works very well as a model. It streams the payment to people. So that level commission, for instance, is streamed, added into the premium price. It's paid monthly. It works for people. They're happy with that. But on a broader basis, I'm a consumer person. I want to see better information out there. These points put right up front. People will make their choices. They'll negotiate, as they do in every other business.
I think the issue of choice is about informed choice. It's having information. And where you don't have that information is where conflicts arise. Now, fees, commissions and so forth are complex because some advisors couldn't explain where all the fees come from in the first place. Some of them are embedded, they're hidden, they're complex, they're irremovable in some particular way, and that creates issues of conflict. I think, in my view, that most people are happy to pay however the fee is structured, as long as they understand what they're paying and what they're getting in return. And it's a critical issue because it's an issue of choice. It's also an issue of clarity and understanding and information. And when people have all of that clearly at their fingertips, it's hard to complain later if something does go wrong when you fully understand exactly what you're buying, how much it costs and where the money goes.
Well, we're constantly bombarded with our people complaining about people from the real estate industry holding themselves out to be advisors. I think we need to have a look at what is the unregulated market as well, because the regulated market is pretty well tidy. Yes, there's a few bad eggs out there, as there would be with any accountants, any lawyers, any doctors. You won't get everybody perfect. But a lot of the publicity that comes to our industry at the moment are not the people that are licensed in our industry. They're people external, getting someone to buy 30 properties and later on they find out they've got a land tax bill coming through, and all these issues in the unregulated areas. I guess, Bernie, if I could ask you one question. Product providers, they're not held responsible for what they say and do. And I can tell you now from discussions we've had with a number of them, and we've suggested it in open forums, that you guys should be responsible for what you're telling the public about your product, what you tell the research houses and the dealer groups about your product. Their answer was, oh, well, you'll never have any new product in the market. But it's quite incredible that the planner can be blamed for what, whether it be a bank or a fund manager, suddenly changes their way of managing funds or becomes very leveraged, and suddenly they go out and do something, and all of a sudden the planner's there being held responsible for inappropriate advice.
Well, I think that's part of the challenge that we're facing, and certainly one of the things we're looking at in this inquiry is that level of responsibility. Who's responsible for what at what point? Certainly, I think there needs to be the capacity for an advisor. If they're the person that has the relationship and are being remunerated by their client, then they need to take responsibility in terms of the products they advise on. You say also that people hold themselves out to be advisors. I mean, look, it is an unregulated term, as is accountant, for that matter.
Yes.
As is accountant. Some of these people are providing what you would call very limited advice based only on their sector. Now, whether it's real estate or a mortgage broker or anyone else, everyone in some way, even accountants, provide some form of advice, regardless of how limited that is. And you find that those who actually understand their proper role and responsibilities will actually say, look, I can't give you financial advice. You'll need to go see somebody who's licensed to do that. The question really comes as the complexity in the financial services world about how deep somebody can get into trouble. And we saw recently just how easily that can happen to people who thought they understood, in the case of Storm Financial, some very experienced people who thought they really did understand products and markets and risk, and in the end found themselves just as trapped as somebody who had no experience at all. If a person logs onto the internet and goes through whoever, a mortgage broking house, E-Trade, Comsec, whatever it might be, logs on and buys shares in something, they take full responsibility for the decision they make. If they go to an advisor and ask for specific advice and pay for it, it's a shared responsibility. If an advisor directs them into a product of which they've had no say in, they haven't specifically asked for that product, but are directed into a product, I think it's a different level of responsibility. And I think there's much more responsibility. So it's a difference about what am I providing as the professional compared to the responsibility of the individual who decides of their own volition to just go out and make a decision, an investment decision.
Well, I started my career as an advisor, as an estate planner, and I've run consumer companies that sold direct to consumers, provided services direct to consumers. Look, it concerns me enormously because one of the possible outturns we could have here is, I'll use the term product flogging. We're going to end up with an industry with big brands, regardless of what they are, with tired staff and their own products, and there won't be any consumer choice. And that is one of the possible outcomes out of this, and we will have gone back 20 to 30 years. So we broke away from that model. It wasn't competitive. It was very expensive. Those are the most expensive models for consumers you can have. So I'm very concerned that enough people get access to advice. I like the idea of the government and the industry playing a big part in consumer education and simplifying things like products and remuneration choices. We need people to be discussing these things. They do discuss them in some other industries quite openly. In time it will happen, but it's early days still. But I'm concerned that we might end up destroying the very thing that Australians value the most, namely advice. They need help. They need to be able to ask questions.
Look, I share Jim's concerns, but I'm afraid I think that when we talk about the we here, that it's already happening. That lack of competition that bundling into the larger providers and the lack of choice is already taking place, and it is an evolutionary process. And I think one of the challenges that my committee faces is trying to restore some competition, restore, if you like, a clearer understanding of the sector, and remove some of the fear that I genuinely believe a lot of consumers have about financial services. It's very complex for ordinary people. Even people who have some sophistication find it complex and difficult. And I think what we've seen in the recent months, the last year and a half, just reinforces that. The challenge for the whole sector is to try and restore some confidence, try and restore some simplicity, and really not make it a job for government. Because the job for government then, we only have one control lever, and that's regulation. It's not always the best control lever, it's just the only one we have.
Yes.
Very important that the industry understand, and I think the evidence is all around us when we start to discuss these things. It can be confusing.
Yes.
For people who experience, apples and apples aren't always the same in this case. It's not about having a fear of the outcome of this inquiry about the recommendations. I think it's pretty obvious for anyone who follows it, but also follows the market, follows what's happening in terms of that evolutionary change. They will see that certain methods are considered to be old methods and will not survive of their own time. That there is a move away from certain things. Certain commissions are already seen as a taboo. There's a view out in the marketplace from consumers that commissions are bad. Now, this is not something we've legislated for. This is something that just exists in reality. How do we work within the frameworks that exist? And if we just look at FSRA and look at what the intent of FSRA was, and that is to provide clear, concise information. And of course it's been lost. Over a short period of years, the intent has faded away. What we now see is lengthy documents that are really complex. Sure, all the information may be there, but I can't find it, and I'm sure most consumers can't either.
Well, driven by over-compliance, I would suggest, Robbie Bennetts.
Yeah, well, Brian, we would love to see everything simplified, and we think it's in the best interest of the client.
There's a great deal of trust that's not apparent from headlines. I think there is trust in some sectors. We've just come out of the global financial crisis. When we last had this market period in 2003, we had the choice survey of advisors. There were a lot of concerns. Now we've got the same issue again. So it's abnormal markets have helped put that pressure on. I think there is trust in life insurers. I see all our complaints. I don't have those concerns. So I think that provided the industry does need to open up, simplify, self-regulate a little bit more, including the issues like a storm, the industry should have tried to stop that happening, as in fact the banks should have stopped it themselves through their risk management practices. If they had, this would never have happened. Yes, we do need as an industry to move forward. We want to. We've been asking for it. I've been a fierce critic of FSR since 2003 because the idea that you produce lots of disclosure information and educate people is a complete nonsense. You have to give them the key salient points, make them aware of the things they are. There's only 3 or 4 things that they really need to focus on. One of them's conflicts, 2 of them's remuneration. Get debates, discussions going. Industry, ASIC, government working together to try to educate the consumer more. We have to believe there's a better future, but the past isn't completely broken either.
I think the importance of the sector and people who work within the sector to demonstrate value, to demonstrate need to people when you actually have them in front of you. It is an industry where you need to literally go and disturb people rather than them coming to you for advice. Where you can do that and demonstrate that value, I think people will accept that it is good for them, and it's about a holistic approach to managing their financial future and giving them some options and choices in later life. And I think we all agree with that. And certainly that's an approach I take to this inquiry, that it is about enhancing what the service people receive. It's not about making the industry more complex or more difficult. In terms of the fear, and I accept that there's a fear out there amongst advisors and people who provide advice about change. But I would say to them, the greater fear would be that if the sector continues on its current path, that more and more people will lose confidence, that the onerous task of requirements of people now will just become more onerous as the industry itself escalates the provision of statements of advice, the complexity in the work that it does. I'd fear more of that taking place than a reasonable and responsible approach to looking at a critical period in time, which we've just been through, the global financial crisis, the collapse of some major corporations in Australia, and a collective loss of some confidence in the financial services world. So I think the real opportunity in terms of the committee and what I'm doing, and the opportunity for the sector, is to understand that change happens regardless. It happens in many different ways. It's not necessarily just through the work of one committee and our recommendations. It happens across a whole range of areas, and it happens more pronounced, I think, or more acutely within the market itself and the way people react. I think people are more intelligent, sophisticated, they demand certain things, and they look for the protection in other areas, the protection in legislation, the protection in the shingles that hang on people's front doors from their membership to certain associations. They look for that as the trust, the value component about getting advice. I think there shouldn't be fear in the sector. The sector should look at the great value it adds to people's opportunities, and it should look at where do we provide a service, where does the sector provide a service where we can provide great confidence to people they'll have a product, both in the good times and the bad times, when obviously there are difficulties that people have to face. So look, my comments would be that sure, look, this report is a cross-sector, cross-industry. It's a broad report focusing in a couple of areas in terms of case studies, the Storm Financial Opus Prime. But I think people should see it as an opportunity to help be part of the consultation, and that's certainly been the case, to have a better outcome, a better future, a better way forward, some more simplicity in the area, better regulation, more efficient regulation, rather than just more of it.
Gentlemen, thanks very much for joining us in the studio today. There's some great insights here for financial advisors and a level of comfort, perhaps, going forward.